All right, happy Friday to you. Thank you so much for tuning in. I'm Marlon Bowling with you, and let's take a look at some brand new information that just came in off of the wire. Another export sale reported overnight. We're starting to put quite a string of these together now. That's good to see. So this time it was soybeans, and they were sold to unknown destinations. The amount, 198,000 tons this time around. So, a pretty successful week for soybean sales, I would say. I want to bring in Brian Hoops, the president of Midwest Market Solutions. And we'll talk about this a little bit. Not a bad way to start out the new trading month of September here. And by the way, happy Friday, the final trading day before a long holiday weekend. And happy September to you. So now we have a clean slate to deal with. Now what?
Good morning, Marlon. Yeah, great to see more export business. And, if you're China in this situation, you really cannot afford to be booking some purchases in here. And I'm surprised they aren't doing the same thing with corn. But of course, the balance sheets for corn are far different than soybeans. Soybeans are a very bullish balance sheet with tight stocks already at 245 million bushels of ending stocks, and then yields probably shrinking from the last report because of hot and dry conditions to end the month of August and early beginnings of September in here. So yeah, they have to have some forward coverage. The market knows that, and we're seeing some premium being placed into it. Typically, we go into the delivery period, we see a little bit of weakness, we absorb those deliveries, and then we start to rally. And that delivery period, it started a couple days ago. We had no soybeans, corn, soybean meal, soybean oil deliveries, but we did see pretty heavy wheat deliveries. So it looks like they absorbed those fairly well yesterday, trying to rally at times, and then, of course, trying to trade higher here in the overnight and into the weekend. So here's an interesting tidbit for a corn market. 8 out of the last 10 years, whatever direction corn closes on the Friday before Labor Day, it tends to trade that way on the Tuesday following Labor Day. So 8 out of the last 10 years, whether it was higher or lower, that's usually the direction on Tuesday morning. So that's at least a positive here for the corn market that's trending higher in the overnight.
You guys, you don't miss a trick, do you? That's interesting. You dug that one up. I wouldn't look for that one, but all right. Let's take a look at our overnight trade here. Let's go to corn, all right? On the quotes from bar chart, here we go. December corn up 6, 484 and a quarter. That was a pretty positive close. I mean, Brian, we're only one tick from the high of the day. And I was mentioning on my morning podcast here this morning that, I wouldn't be surprised the week after we come back from the Labor Day holiday to see a lot of combines rolling across the southern part of the Corn Belt.
I completely agree with you, Marlon. It's getting into Fridays and Saturdays, so it's getting into a busy travel season for us. So we're out on the road a little bit more, and we're starting to see some combines going already. Some of the corn, of course, in Kansas is being harvested, a little bit in Missouri being harvested. I even saw a field opened up in southwest Iowa, so south of Council Bluffs. It just taken some end rows off. There was still some green husk out there in the field, but a lot of it was brown. But yeah, we've had a lot of clients from all over Nebraska, all the way across into Illinois, Indiana, telling us that their crop is rapidly maturing with this heat. Harvest is going to come much earlier than normal. A lot of corn going to be taken out the first week or so of September. Usually it's the soybeans that go first, but it won't be this year. There's been a tendency for soybeans to be planted a little bit later. And so, yeah, we're going to see, I think, a lot of corn harvests really start to pick up here in the next several weeks.
Wouldn't that cause the local basis to crash?
I think it will. If you see, a fairly active harvest pace and some of that corn being hauled into town, the end users no doubt will get some of that product, but they may have to bid up for it at first. I think a lot of this crop, they're going to see what the moisture is and then make a decision whether it goes to town and gets sold, whether it gets put into a bin and stored, or if they have to put any type of air on it. But I think the drying costs this year are going to be pretty minimal because of the heat that we're seeing to end this growing season.
That's a good point. Hopefully we won't have to be concerned about any early frost this year on the corn anyway.
I don't think so.
Beans may be a different story. Let's take a look at the soybeans right now. What are they doing on the trade as we closed up? Globex, well, on the big board here, 13 3/4 higher on November at 13.82.5. That's only a penny and a half from the high of the overnight trade. That was a pretty strong performance at the end of the session there, Brian.
Yeah, I like the action in the soybean. We were hoping they'd even correct a little bit further, get into some major retracements. But when you have demand like we've seen almost every day out of the soy complex here, out of either China or the unknown destination, it's going to be hard to have that real deep retracement because you're taking probably yields off of the bushels, and you're taking ending stocks away here with these export sales that we have on the books.
And we had a pretty strong performance on wheat as we ended up Globex. Let's take a look on the Chicago. December was up 7 1/4 this morning. On Kansas City wheat, you had December rallying 11.5 cents. Not a bad finish to the overnight trade there. A couple of ticks from the high of the overnight session. And December spring wheat, 7 1/4 higher at 7.74. We'll come back and we'll talk with Brian Hoops about our livestock trade. Finally had some cash cattle activity yesterday. We'll talk about it next. All right, we're talking with Brian Hoops of Midwest Market Solutions. If we take a look at our livestock summary from yesterday, Brian, we can take a look at the cash cattle market activity. It finally shook loose out there in the country. Now, from what I'm gathering, it sounds like we were hearing asking prices yesterday on live cattle, cash cattle, at about 181 to 182. The actual sales came in at 178 to 179. I guess it was gravitating more toward 179. I'll call it steady, maybe a little weaker, I think. And dress basis sales were 288 to 294, a fairly wide range, but I hear that was down a few dollars from the previous week. Do you hear anything different?
You're spot on with the cash trade, Marlon. That 178 was basically traded in Kansas yesterday, 179 in Texas. So, yeah, the 179 is going to be steady, 178 $1 lower. So a little disappointing to the feeder this week. Dress basis about $3 weaker, but I don't think it's totally unexpected when they're buying for a holiday short and kill week next week. They don't need to be aggressive buyers or bid up in the market. Now, it's the following week where we would expect cash trade to improve. This week, it looks like they're putting together a decent Saturday kill, could push us to a 7-week high in our weekly slaughter, maybe up around 630,000 head, which is not overly aggressive, but it's better than it has been over the last 6 or 7 weeks. But next week's slaughter going to be down with Labor Day, most of the plants being closed. But the packers will be buying for that full week next week. And that means cash trade, I think, could be steady, maybe even higher. If they continue to try and put together these big Saturday kills, they're going to need to bid up for the cash markets, and products should firm with Monday with the plant closures being down.
Any clues for livestock trade from the economics data that came out this morning, the jobs report?
Yeah, they were the numbers that came out, 187,000 jobs versus 170 that the trade was expecting. I thought that, a little bit disappointing. Unemployment rate rose just slightly, but the stock market has kind of shrugged it off. I guess the good news is the dollar has started to weaken off of that news. And a lot of the talk this morning is that maybe the Fed isn't done raising rates yet. They're going to have to raise rates at least one more time to kind of curb some of the inflation. And I would tend to agree with that. I don't think they're going to be cutting rates anytime soon. We're probably looking at one more rate hike, but again, what we see in demand will be kind of the key for this cattle market. We had strong exports yesterday, shipments at a 52-week high, and as long as we're making sales and the consumer's still buying cattle at these price levels or buying beef products at these levels, that demand is going to support these price levels.
December live cattle closed 57 cents higher yesterday. We'll see what they do today. The October feeders were up 80 cents. And we settled yesterday with the lean hogs on that October contract down $1.05, December down 77. Brian, have a great long weekend. You deserve it. And we'll talk with you next week. Brian Hoops of Midwest Market Solutions with us with some key information here on a Friday morning.